Hello, chart watchers and Decision Point faithful. Welcome to this Friday, May 24th, 2019 Decision Point show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, it's looking like we finally got some sun, Dad. I've been watching all that rain, and now we finally look good.
Right. We need a graphic, right, for this show, though, to show all the cars leaving town.
Oh, I know it. That is true. It's really been crazy. We live on the way to the desert. So we end up getting a lot of the LA and Orange County traffic driving right through town on the 10 to go to the desert. So yeah, it's pretty crazy right now with the 3-day weekend.
Right.
And it's been kind of crazy in the market. So let's go ahead and look at today's agenda. We're going to be looking at, of course, all the broad market indexes, and I do look at those price relative charts. We'll also be doing the weekly review, of course. This is really the purpose of the show, is to give you that update as to what's happened over the week. I'll look at the scoreboard indexes, our sector scoreboard, and of course, I'll be covering the DP indicators as well. And then Carl will be up with Big Four. He'll look at the daily and weeklies for dollar, gold, oil, and bonds. And then our bonus material today, we're going to look at the SPX percent of long-term trend model buy signals. And this, I believe, Dad, this is one that you have come up with on your own that you track manually.
Right. I need to convince Chip to put this one in the build. But now I'm doing it by hand.
Yes, indeed. Of course, now we're going to end up with all these survey comments, and Chip's going to go, "What happened?" All right. Well, let's go ahead and look at those decision point scoreboards. We did get one new signal this week, and it actually came in today. It was the Dow. We saw the 20-day EMA cross below the 50-day EMA. And when this happens, we will get either a sell or a neutral signal. But because that 50-day EMA crossover happened above the 200-day EMA, it's a neutral signal. So meaning cash or fully hedged, sort of that idea. A lot of people ask that. The sector scoreboards are starting to lose all of their green and turn a bit more red. This is generally, I mean, I know we've watched this board, similar boards over the years. Typically, when you start seeing these flipping, as I call it, when you get those signals, those buy signals flipping away, that really gives you a sense of the weakness that is going on in the market right now. And so this is kind of concerning for me. The industrial sector, we did get an intermediate term trend model neutral signal. Similarly, it makes sense, right? We just looked at the Dow and it had a neutral signal. And then we did end up with materials coming in with a neutral signal. I think that happened this week as well. The energy sector, we're still sitting on 2 sell signals, not the best place right now to be. Although I have to say, I noticed energy had a pretty decent day today, but it has been a laggard. So let's go ahead. We're going to move right on into our charts. Okay. And whoops, there we go. So I'm going to start off with our relative of the NASDAQ, OAX, IGH. As you can see, all of them here. I don't need to read them off. These charts that I'm getting ready to show you are all in the Decision Point Live chart list. And it's really easy to find. You just go to the articles tab. You click on our blog, which hopefully you do every single day. And there is the link to the live chart list. And it basically, all of these charts I'm getting ready to show you are available to you here. So I just wanted to let everybody know about that before I got too far into things here. All right, so what I was noticing, what Carl and I should say were noticing, is right now, with this weakness in the market going on, we're seeing mid caps and small caps really underperforming. And honestly, technology, the NASDAQ 100 is really in that same boat. Those areas in particular, you really want to see being going the right direction. Typically, when you're outperforming with small caps and mid caps, and even with the Nasdaq here, it stayed relatively the same. But that's where we got that nice rally. I don't like seeing this problem with participation. Now, I know there's a lot of talk, obviously, with the trade wars and those sorts of things, and a lot of small businesses tend to be a little less affected by those. So rising dollar, small caps, trade wars, all of that, we really should start seeing a little bit of improvement, I would think, in the small and mid caps, but not so, at least not yet. Broad market indexes. Here we go. One of the things I was noting on this, and I'll point out some interesting stuff here in the thumbnail that Carl and I talked about, but what I was noting is here's the high that we had right back in September, where we had a lot of peaks. Actually, small caps peaked a little bit earlier than that. But notice, the equal weight managed to top that high. The S&P 400 not really close. And look at how far away the small caps are from even challenging their September top, or August in this case, August, September. And they're very far away from even getting there. And now it looks like we're really stuck in kind of a trading range here for small caps. Really important support right now that we're sitting on. So looking for that rebound, but there are a lot of problems out there. But I think small caps could end up benefiting somewhat from the trade wars going on. NASDAQ 100, you can see, is pretty much, blew away its tops from back in August and October. But yeah, we're still seeing some problems here with the small and mid caps just not performing, not getting up and getting out of their sort of bear market stance right now. Bias, I should say. The global markets, we're looking at the ETFs, so they are the currency is in dollars. The ETFs are in dollars, so we keep all of the same so that we get the same picture. We were having discussion about that, and we finally figured that this was the best way. The main thing I wanted to note is that we're still look at France, UK, Japan, India. None of these have really even, well, they certainly haven't challenged their tops back here, like I was saying with the small caps, but many of them haven't even moved out of declining trends from the big time, 2018 drop, the top that happened right before the big drop. And we're just not seeing that kind of improvement. I'd say Canada was probably one of the better performers, and Germany does seem to be coming out of that declining trend, although notice it was quite steep. All right, let's look at the Dow. Start looking at some daily and weekly charts. Oh, I didn't show, so I'm going to go back because I can. I meant to show everybody in the thumbnail. We were talking about, and these are the major areas of the market that we're studying. What we wanted to note is that right now in the S&P 500 and the SPY in this case, looks like we're forming a double bottom, and you can see the same thing going on with RSP, the equal weight. But notice the S&P 400, the S&P 600. These are showing declining. The bottoms are declining. We're getting lower lows. You've got the industrials where we could be looking at possibly a double bottom here. And back here, NASDAQ 100, another lower low. Possibly the setup for a double bottom, but RSP and the S&P look a lot more, I don't know. It just seems more clear to me there. All right, so I can just go, I'm gonna whip through these quick. So there's that double bottom. We're seeing PMOs now in negative territory for the major indexes, certainly defining that weakness. And we can also see there's that intermediate term trend model neutral signal. On the Dow weekly, excuse me. There we go. The one thing I just really wanted to point out is, of course, we're on that buy signal in the intermediate term, but we've seen the PMO top. It is coming in for a possible negative crossover. Again, I think just another point to be made toward the sort of that bearish bias we're seeing right now. and the NASDAQ 100. See what we were saying, you could maybe make a case here for a double bottom. The thing that worries me more is the fact this short-term low was taken out yesterday, and then we did end up closing below it. I think that that's not the best sign. So even though we had, not a terrible day for the NASDAQ 100, it did close below that 7,300 level, or just slightly above. But that's something I'm going to be watching. All right, on the weekly chart, just wanted to note that the PMO is topping. I don't think there's much else there. OEX daily, you're going to see that double bottom formation. We're watching on the S&P as well. Note also that we're getting a negative reading now on the PMO and declining tops on the OBV, matching, of course, the tops on the price tops. That's a confirmation of this decline. All right, weekly chart, again, topping PMO. That's pretty much the information you need to know from that. And now for the S&P. All right. So on Wednesday, I was writing about a possible ascending triangle. Of course, that did not come to fruition in the very short term, but now it looks like we may be turning in a little bit of a double bottom here. With everything as weak as it is, and when we're going to look at some of the indicators, I think it's certainly, it makes sense that we'll come up and hit that confirmation line for the double bottom, but I don't know if things are remaining weak. The PMO is now in negative territory. Again, you can see the OBV is not looking very healthy. I would look more for a consolidation on the bright side here. On the optimistic side, I'm not really looking for that breakout, at least not yet. And that's going to be apparent because I'm going to show you the intermediate or the short-term indicator chart, and that's where I have most of my heartburn right now. The PMO is topping on the weekly chart for the S&P. You can see we were in that very steep rising trend out of the bottom from December of last year. And now we've made a fairly steep decline and drop away from that, waiting to get a really good bottom here to be put in so that I can move this and maybe adjust this rising bottoms trend line and see where we're going from there. But right now, it broke the steep that steep drop, or the steep rising bottoms trend line, and now we'll just watch for the next bottom.
And put up the monthly chart briefly.
Sure.
Just wanted to note the monthly PMO is topped again.
Oh yes.
So it's
and
it's not final until the end of the month, obviously, but that's a bad sign. And
yeah, that's a particularly bad sign.
If it closes the month like that.
Right.
It's only 4 days away.
Yeah, it should, but we've seen stranger things. All right. Ultra short-term indicators are very climactic indicators. This is where we watch volume, breadth, and the VIX. Right now, I would say, the VIX isn't telling us much. It's sitting right in the middle of the Bollinger Band. And I don't see, at least for today, any climactic activity as far as the advances declines. Yesterday, I think you could have made a case for possibly a selling initiation, on that big drop after the rising trend we had. We didn't end up with a negative day necessarily. It wasn't particularly positive, but I would be watching. I still think that could be a clue that we are still looking at a possible selling exhaustion there. It just hasn't come to fruition. Or selling initiation. Ooh. Don't want to mix those two terms up. Okay. Short-term indicators. One of the things I wrote about on Wednesday that I've been looking at are these short-term indicators. When we're in a good bull market move or good bull market phase, you tend to see these oscillate above the zero line. Well, we were doing that on this beautiful move to the upside, but then we poked way down on this decline. Of course, you've seen that happen before, but when we came back up, notice we didn't get as high as we did the previous time. And I find that a little bit concerning. We are now in negative territory for both of these. Yes, they decelerated a bit today, but I'm still looking at these as very negative. intermediate term indicators are also not looking too good. Two tops below the signal lines. We're not seeing the ITBM in negative territory just yet, but we're getting close. And again, just to remark, I talked about it earlier, the PMO is in negative territory now for the S&P 500. So the intermediate term is not looking too healthy either. I mean, it certainly gives us a lot of pause, and I know things have been a bit volatile here. And with the trade wars and everything else, it's going to be really hard to see how this affects everything. But for now, I think the indicators are looking pretty bearish. All right, you're up. Dan, I'm going to pass it to you, and let's see what we got to say about the big four.
Okay. Incidentally, just on the trade wars, my personal opinion is that the differences between us and China are not going to be resolved. I don't think they ever really wanted them to be.
Mm-hmm.
And so if that's what I would be counting on or looking forward to, is that the trade war is not going to get resolved. Yep. Okay, we've got the dollar index. I don't know what happened on yesterday, but it opened way up, and I noticed that finally, before it finished, it closed down for the day, and quite a big swing there.
Yeah, it really was very volatile day.
Still contained in the rising wedge, very loose rising wedge. Okay, let's try the weekly. Mm-hmm. There's better context. We've got still that rising wedge, but also it's come very close to the long-term resistance line, and that line goes back to, gosh, what is it, 20?
Oh, it's a while. Yeah, 13 or?
It's back quite a few years. Mm-hmm. So there's that's not just for what we can see on the screen. It's a longer term line of resistance.
Yeah.
And you notice that the PMO has been moving flat for really close to 2 years, and basically reflects. It's not a lot of help because you're not getting tops and bottoms, but it's still telling you that there's a steady up pressure on the price. So right now, it's still looking at a possible upside breakout, but based on that resistance being so long term, I'm going to say I doubt it. Mm-hmm. Let's look at the weekly. No, I'm sorry, the next gold 1 year. Okay, which gold tried to break out of that falling wedge once, failed, and basically it's got a series of triple bottom going inside the falling wedge and trying to break out of there again. I'm not going to put a lot of hope in it, just because it's gold, but you got to give it credit. Let's look at the weekly. It's still been holding in the trading range for quite a few years, and we still need to see that weekly PMO to turn back up, because right now it's in a negative situation. Okay, crude oil had a terrible week. You can see it broke a rising trend line and way down below it. PMO topping below the signal line. And today it closed up, but it was still within the range of yesterday. Let's look at the weekly. Okay, this week I put up WTIC along with USO. See the weekly PMO is topped, and crude oil, the resistance, the support line is right around 40. It's actually $42 a barrel, and we're probably headed that way. I mean, I heard on the news that we have a surplus situation, which, I've kind of figured that for some time.
Okay.
Bonds. A breakout from a triangle situation. Very positive. Obviously, the Fed's talking about maybe lowering interest rates. People are thinking that way. So let's look at the weekly. We can absorb some more of this upside before we hit that longer term resistance line. And we've got a rising wedge situation, so we could see a breakdown from that. But at this point, I don't expect it to go very much further down. I think you could get breakdown from the wedge, but then it would just set a little less steep rising trend line and still head for the resistance up there.
Mm-hmm. Yeah, it's a great looking PMO right now.
Right.
It's hard to get too bearish. All right, it's time for some bonus material, and we have plenty of time to talk. So,
yes, we do.
Yes, let's enjoy it.
Okay, you still see. I don't think you mentioned that, but we have the devil top situation.
Yes.
On the SP 500. That's kind of incidental to what I wanted to talk about on this chart, but there it is. And it's quite a ways before we even get down to possible confirmation by breaking down through the confirmation line. Got a long way to go on that.
Right.
But the percent of long-term trend model buy signals, the long-term buy and sell signals occur when the 50 EMA, 50 EMA crosses up or down through the 200 EMA. And up on the upside, it's commonly referred to as the golden cross. And so what we track on this index is the number of golden crosses or long-term trend buy signals, the percentage of them in the S&P 500 component stocks. So most recently, the breaking news is we broke down through the signal line this week, which is the sell signal for this indicator. You notice when the buy signal came back in what month? That's January. Mm-hmm. And then prior to that, we had a sell signal in October last year. And notice that there's a squiggle there. We actually got a sell and then a buy and then a sell. The thing about this indicator is it runs fairly slowly. And if you notice that starting from the left-hand side up until October, it's moving slowly, and it's hard to keep it above the 20 EMA. Normally, signal lines I set on indicators is 10 EMA, but I couldn't do that with this one because it's so tight. So that's more typical of what it looked like. We don't know. I don't have any more history than this at this point. And but if you look at the nice clear signals we got in the last year, notice how far apart the index and the signal line are, both down and up. And that's because, well, look at the price chart. You went from the top in October to the low in December in in just a short period of time, and then you just reversed it to the upside. So we don't get that usual creeping along. It takes a lot of work for the 50 to cross above the 200 or below it. So it's just unusual to see this since October, to see the spacing between the signal line and the index. It's probably going to prove in the long term to be a very unusual type situation. So I wouldn't take every single sell signal that you get off of this in the normal course of a rising or falling market that is going rather doggedly, because you would just want some more proof behind it, something else to back it up, to confirm it. Mm-hmm. But right now, this sell signal looks excellent. It goes from a wide space down to a sell signal in a relatively short period of time.
Yeah, this should be an interesting indicator. Yeah, trying to get the back data on that would be really, really, really difficult, though.
Right.
So it's a new one. Everybody gets to see our new indicator that we're working with.
And we've already looked at this chart, but there were some things I wanted to talk about on it. First of all,
the magical chart.
Okay, what happened to me here? My cell phone went off, of course. So one more thing I hadn't planned on. Okay, how do I get back to?
Oh, there. Yes, you can't see me, huh?
Okay, I'm back on the chart. Where was I?
You wanted to show us some stuff we hadn't talked about yet.
Oh, yes.
You have, 2 minutes.
These are all these indicators are not climax indicators. The ones that are climax indicators give you something in one day, like net advanced declines, your net advanced decline volume, and total volume on the bottom there.
Oh, yes, here.
It's those are the ones you get in climactic indication from. Whereas the other ones, the VIX and the new highs, new lows, those can be confirming if, new highs, new low. When you're moving up, making new highs in the market index, you would like to see these confirming the new highs in the index, or the new lows if the index is going down. But right now, neither one is any good, because we're off the highs for the index, and we're not making significant lows yet. What have we got left in time?
We've got about 30 seconds. These were option expiration days, right? The asterisks.
In the quarter option expiration. The other two months in the quarter, or weeks in the months, that do not create this kind of high volume. So that's why we mark those, to just let you know that's option expiration and not something else.
All right. Well, we're going to end up having to talk about this chart again next week. Okay. We'll just keep it the magical chart going. All right. Well, I do want to thank you, Dad, for being here, and everybody else for being with us. Remember to complete the survey. Quick reminder, we do air on Fridays at 4:30. Happy trading. Happy weekend.